Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm here to bring you a market wrap-up for the week that just ended March 29th, 2024. In fact, this was actually a short week. Today is Good Friday, so in fact, there were only 4 trading days during the previous week. What I'm going to do here is I'm going to go through and give you a quick market wrap-up for the 3 major trading indexes, the SPY, the QQQs, and the IWM, which is the Russell 2000. And then we'll also take a quick look at the bonds. Before I get going here, the usual disclaimer, Precision Trading Labs, we are neither financial advisors nor money managers. Everything we do is in association with our subscribers, is to help them become competent, confident traders, and everything, of course, is for information and educational purposes only. So let's take a look at the at some levels here. So here is the SPY, which of course is the ETF of the S&P 500. Here was the close last Friday, which was March 22nd. And then of course, here are the 4 trading days that have transpired since then. We have to be looking here at a 2-hour chart here. I generally start out looking at the daily, and then certain levels kind of show themselves in the daily, and then others I drop it down to either a 1 or a 2-hour chart to help refine it. So right here, we have a in here a drop base rally formation here, and this is an area where there's a sudden exhaustion of sellers here, and then price kind of rocketed out of there. So we expect when price returns here, because we were only in here for a rather short amount of time where supply and demand were in balance and then went out of balance, we expect that when it returns here, a fair amount of the time we're going to get a bounce out of here because this is a demand zone here. Okay, and so that's a very short distance down here. That's only about a 0.5% from where we closed here. And of course, we're right at the level here again of all-time highs. So anyway, this is only about a 0.5% down from where we are now. And then further, if this level would crack and would not hold, then there's another demand zone right here, a rally-based rally formation. And that's only about 1.5% down. So these are kind of 2 near-term bullish trades here. Also, to let you know, if you look below this video, you will see a link to another video, and that in that video I actually go into in some detail the whole supply and demand concept, so you can get further details about that by going to that link. All right, so at any rate, this is what these trades would look like from these zones here. Here would be our entry. We put our stop a bit behind the demand zone here. I tend to use something on the order of about 10% of the average true range of the daily ATR as kind of a little extra wiggle room for the trade. So this is what our trade would look like. Here's at the risk within this depth there, and then that's a 1-to-1 trade, a 2-to-1 trade, a 3-to-1 trade, and that's of course what that same thing down here at this level. All right, so these are 2 demand zones here. After that, you then have a couple of areas of what I consider to be kind of sloppy support here, but there's no demand. And then after that, right in here, there's another demand zone, and but that's only based on a 30-minute chart. So I generally prefer higher time frames, but there is a 30-minute demand zone in there, and that's about 4%, probably about 4% below going from here to there, because that's about a 20-point move going from that lower demand zone here to that one. So that's about a 3.5 or 4% move there. So, but anyway, this is what I would be looking for in terms of demand zones here. And in terms of what we would do with those, of course, is we could express a trade by either buying a call and of course buying stock. So these would be 2 ways of expressing a trade out of that demand zone: either buy stock or buy a call. And then you could also sell a bull put vertical spread in order to collect premium. So that would be another way of expressing the trade from a demand zone there. At the moment, there really aren't any supply zones because we're sitting at all-time highs. So there's really nothing above to kind of push against. at some point, once there's a pullback and then another rally up there, we may actually create a fresh supply zone. Okay, but right here, all we have at this moment is this area of kind of, really sort of unconfirmed resistance, because we have 1 point and 2 points there. So you can almost think of this as kind of like a weak double top there. But that's really the only thing that's there. So I would not be racing to short up there if price returned there the third time. So that's the SPY. We can take a quick look here at the Nasdaq, which of course is represented by the QQQ ETF. And so right here, okay, again, right there's your all-time high. So of course we're on the Qs, we're 1 or 2% off from that. Right here, this is a similar level, I think, to what we saw in the SPY, except seeing it in here on the Qs. But there's that same level right there, and that's about 1% down. And then after that, again, there's a weak level of support here, and then below that, right here is a drop base at a rally here, and so price has not been back there since. And so at that point, this is a fresh level of demand where supply and demand went out of balance, of course, where there was no longer any supply. And so all you had left here was demand, which is an area of what we can think of as untapped upward buying pressure. If you look at the charts, you'll actually see this gap in a lot of charts, and particularly in the tech sector. And I refer to this as the NVIDIA gap, because on, I think, February 21st, after the market closed, NVIDIA announced earnings, and that kind of juiced them, and they knocked it out of the park. And so as a result, the next day, the Qs and a lot of the tech sector and the broad market in general gapped up. And so I refer to this level, this gap on all of these charts, going from the 21st to 22nd. This is the NVIDIA gap, and you're going to see that all over the place. So at any rate, so again, we have a demand zone right here, about 1% down on the Qs, and then after that, there's another demand zone about 3% below this one, if this one would not hold. And again, we would, of course, then again, we could express the trade, either by buying stock or by buying a call. And again, what we would do is the trade would look something like that. Okay, so, and again, we would use the 10% of the ATR. So that's about 50 cents. So we would put the stop right here at about 436.80 or so. So this is roughly what that trade would look like. So that would be a 1-to-1, 2-to-1, 3-to-1. All right. So that's the Qs. We take a look at the Russell 2000. So right here, if we actually go back in time to March 22nd, March of 2022. So that's about 2 years back. Okay, but if we go back here and then we'll flash forward, and I'll show you what I'm about to refer to here. Okay, so right here we have this rally base drop formation. Okay, and so this occurred in March of 2022. So basically about 2 years or so ago, and then we hadn't been back there since, until we got over here, which is right there. Okay, and so that occurred at the beginning of March of this year. This is about 3 weeks or so ago. And so basically price came up into here and immediately dropped out of here. It kind of just really kissed this level, and it kind of dropped out of here. So now flash forward 3 weeks, and now this thing is now driven into this level, but it is now showing, and this all occurred yesterday. And if we blow this up here, we can see price came up into here, and then notice now it started after the initial 2 hours. For the remaining 2/3 of the day, it essentially then rolled over. So it's now at the very bottom of this supply zone here. So the thought being is that if in fact if it continues and actually starts to drop, then we could actually takes a bearish trade on what we refer to as a confirmation entry, because price went into the zone and is now coming out and actually going in the direction that we'd be looking for. And at that point, then the same way we talked about expressing a trade by buying stock or buying a call before out of a demand zone, in terms of a supply zone, what we could do, of course, is to then short the IWM, or of course we could also buy a put, and if we wanted to collect premium, then we could sell a bear call vertical credit spread. Okay, so those are all ways, again, of expressing a trade, but now expressing it from a supply zone rather than a demand zone. So the way this trade would actually look, and I would suggest actually doing this on a confirmation entry, is let this thing actually drift out of here a bit. So it's at 210.13. That's where the zone is. I would probably wait for it to actually drop, probably, let's say, another 40 cents after that. And so maybe I would get into this, look at that into a trade roughly about there. Okay. And so that's what the trade then would look like from a risk reward perspective. So that's 1 unit of risk. So that's 1 unit of profit, and that would be 2 units of profit. So this wouldn't actually be the greatest trade in the world, because it's quite possible that price would probably maybe drift down to about there. But then you've got this area of consolidation there, and that might actually be kind of the end. It would represent at least a speed bump for this trade. So I don't think it would have like an uninhibited move down to here. I think it might actually get stuck here or even reverse here. So if you were going to take it, if you were going to take this short here, you would really only be looking at kind of a 1-to-1 or a 1.5-to-1 trade, which is not the greatest thing. We're generally looking for at least 2, 2.5, 3-to-1. So 1.5-to-1 is a little below what our standards are on that. Okay, so but that's what would happen on a short. Okay, if in fact this thing drifted down, then right here we have, and again, this is a similar level that we saw on the Qs and the SPY, but here's that rally base rally formation here, and so that's about a 4% move down. But if it does get there, this would be an area where we would actually expect to see a bounce out of here. Okay, so that's the Russell 2000. And then lastly, we're going to wrap up with the TLT ETF. For those of you who are unfamiliar, TLT is the ETF of the longer term Treasury bonds. Okay, so that's 20 years and beyond. So this does not include the 10-year note, but it includes the 20 and the 30, and then I think there might even be a 50 beyond that, but certainly the 20 and the 30. Okay, needless to say, the 10-year note, the trade, the chart is going to be, kind of rhyme with this one. It's going to have the same movement, but obviously the level is going to be somewhat different. But anyway, that's the TLT here. So here's where we closed on Friday at around 94.5. So sitting at around a little over 95.5, about 1% up. Here is a drop base drop formation. Okay, so again, we have a sudden exhaustion of buyers in this case. And so when price returns here, we can think of this as, basically there's only a supply of shares here, but there's no demand for shares here. So this is a supply zone. So when price returns into here, we are anticipating that this is an area of downward price pressure where we can again express a bearish trade. And again, shorting the stock or buying a put or selling a bear call vertical spread that I showed you on the IWM. And then over here below, again, about 1% down, here is a drop base and a rally there. And this is again off of the 2-hour chart here. All right, so again, this is an area of anticipated upward price pressure. And again, if we throw the ladder in here, okay, there would be our entry. Our ATR is about $1 here. So, we would give it, let's say, an extra dime. And so that would look like roughly about that. So that's what our trade over here would look like. Okay, and there's your 1-to-1, your 2-to-1, your 3-to-1. All right. So at any rate, that's what I got. Thank you so much for your attention, and I'll see you next time.